Good afternoon, everybody. This is Mark, and I'm doing the afternoon call. Scott should be back tomorrow. Obviously, we have the trade show going on at the Marriott Marquis, and hopefully some of you guys were actually able to go down, whether it was yesterday or today. So, what's this market doing? You know, there was a little, offensive foul, I guess, maybe on the chat today. I was yelling at somebody. The MO of this market really since the beginning of the year has been we grind higher, we have an hour and a half of a downtick, and then we seem to close relatively fine by the end of the year, by the end of the day. We did hit 13,000 today, which obviously is key, which could be a little bit of resistance purely for the number. Technically, there's nothing telling me that there's any resistance right now at 13,000, except the fact, the psychological number, that we are at 13,000. So from that point of view, I think we actually probably push above in the next few days above 13,000, maybe go to 13.2, and then I think we actually do take a break accordingly. Only issue is I'm not seeing a whole lot of stocks telling me that they're shorts. Doesn't mean you can't make a little bit of quick trades, meaning anywhere from a few minutes to maybe a 2-hour window to make some money on the short side. But for the most part, we want to try to stay on, trend is your friend. You got to do what's been working for the last few weeks. You don't need to be the first to the party, certainly. You don't want to be the last to the party either, but at the same time, you want to be where everybody's at right now. The trend still is up, still seems to be up. The trend is buying on pullbacks versus just chasing new highs. And until that stops working, that's the mantra I'm going to be used. Today, for me, a little bit tough. Didn't seem like there was a lot of intraday action. But let's break down some of the charts that we're looking at. SPY chart, again, you can't really see anything significant right now going on, except we're just grinding higher and we are meandering, lack of a better word, just meandering to the upside, albeit very, very slow. Let's go with our old standby, Apple, which obviously is the market at this point in time. Another new high. It actually, not a new intraday high, but it's a new yearly closing high for the stock. Obviously, all-time closing high, which again, very bullish for it. Is it going to reach the 525 again, 526.80 or whatever that price was? Possibly. It looks pretty good. It's certainly going to need a break at some point in time. But after you had that big down move, and we're right back in there, that is as bullish as you get. Now let's break down some other high beta stocks. I think Google's close. Obviously had a nice little push in the AM. Didn't really do much the rest of the day. And I'll just pull up the 13-minute chart just so you can see. First push up was about 10, 12 bucks. And we really just rested the rest of the day. And we're right around 615, 617. Probably if we gap up tomorrow, it's going to be higher than 620. But if you get a trade above 615, 616, I think you're getting a trade back to 625 from my point of view. Baidu, Sina, some of the other Chinese guys really basically lackluster and more to the downside if you're actually looking for some weak stocks. Amazon, same type of play. A little lackluster, definitely not a leader at this point in time. Will it become a leader again at some point throughout the year? I do believe it will. But right now, technically it's just an avoid. Really, there's nothing too exciting going on. Know your levels. Sorry, guys, I'm a little under the weather. But nothing to really talk about. Some other stocks that we've mentioned on the chat a few times, GMCR still hanging in there. Keeps having a hard time getting above that 70, 71 level and sticking. My opinion, though, it will hit its 200-day moving average before it hits 65. So 200 days around 76.20. Lots of shorts still in it. So it has been hard intraday to really get a hold of a lot of these stocks. Home builders, we can look at Toll Brothers, just basing for really a better half of 2 weeks. XHB, the ETF, same type of play. The moving averages are starting to play catch up on the 21-day moving average. Maybe that gets it going a little bit, but they did move a lot from the beginning of the year, and I think that digestion is healthy. The digestion that's happening right now in this market, the fact that it's not running away from us, the fact that we're not getting clobbered is very, very healthy. Also, something to take notice. Everybody, I know at the trade show, people were asking me, are you afraid to take overnights with a big gap down? Obviously, that's always a fear, but that's part of the nature of the beast and nature of our business. one of the things you got to recognize is as long as the VIX is staying below, in my opinion, anywhere from 21 to 22, I think you're in safe territory, that you're not going to get this, the fear is not in there yet. Now, once it starts to get above the 22 to 24 level, I think you're going to start to see a little bit more fear. You're probably, obviously, selling will have already taken place, but I think that's the key. I'm not really getting too nervous until we get above there. Maybe we stay above there for a period of time. Just from my experience, that just tells me that's the way to be. Commodities, gold and silver today were the two standout commodities. They gapped up. They didn't really give you a whole lot of chance to get too involved. You could have bought right away. And it was a little stair step actually at 1 o'clock today. 12 o'clock, yeah, got a little dip on the GLD. And based on what I'm seeing on the daily chart, guys, it looks good. It broke out of a little bit of a bull flag, ascending channel, whatever you want to call it. It looks like GLD possibly free and clear to go a lot higher. 175 first stop, first resistance, and a little bit higher after that. Same thought process for silver. You're looking right now, it's right at resistance, really maybe 34.50, 35, above there. You're getting into a gap, which obviously can be, SLV could go to, the ETF could go to 38. So certainly keep them on the radar. And if you get a nice little downtick, I think it's going to be a buyable opportunity across the board. Banks, they're doing fine. They're just not giving you a whole lot of intraday move. They're very tight. You could see, standouts. It seems to be, WFC made a new high, but then took a break. JP Morgan made a new high, took a break. Goldman, which, again, it was lagging a little bit, made a new high, took a break. The MO, you're not getting these big burst of movements and big just buying and hold, and they just need to be in at that point at any price. That's the market we're in at this point in time. That's the market really we've been in now for the last 2 weeks. I don't expect this to change. And if a down day happens, I've been skeptical for 2 weeks, and it's really sort of been 2 inside weeks from a trading perspective, because it hasn't been that momentum type of move that a lot of us are looking for. It's very stock specific, very sector specific, and if you're not on the right sector, quite frankly, you're not really getting ahead, and that's what I'm seeing across the board. OIH is, from an oil point of view, not really doing a lot. You could say maybe Schlumberger had a decent day, but then it retraced. Not a whole lot of movement there. The Ags had a decent trade today from the AM. I really wasn't looking at it. POT, CF woke up a little bit. It looks like CF is going to try to test its all-time high, or a yearly high at least, above the 190 level at this point in time. So all in all, guys, I'm looking for pullbacks. If we get a gap down, if we get any sort of pullback, I think it's going to create a nice buying opportunity for us. And I think overall, a dip is healthy, and it will obviously, I think, create a little bit more trading opportunity, intraday trading opportunities for a lot of us. But if that doesn't happen, if the MO of this tape is what we've been seeing, which is, we gap up, we grind a little higher, we grind a little lower, and then we close basically right where we gapped up. Look for buying opportunities on these pullbacks. Look for stocks to hold support, and be calculated in your ideas. It seems like the sell-offs start to happen, by 10:30, and by 1 they're over, or by 1:30 they're over. Today it lasted a little longer. It lasted about 2:33, and then we started obviously, retracing back to the upside. But overall, I think it's a healthy tape. And I think you still have to stick with the trend. And the trend right now is still telling us that it is to the upside. I know Dell is having earnings today. I know there's a bunch of retailers out later in the week. We have JCPenney's, which has been on everybody's radar for a while. People are trading Fossil, FOSL. To me, it seems like this type of action today, where you got a little bit of new highs on a bunch of stocks, and then they just retraced back to their bases, means we're in for more digestion. So you got to trade accordingly. There's times and places to really put on and be aggressive. There's times to really just sit back and let the market tell you when it's ready. And I think we're not ready yet to do a whole lot of anything. And I think this slow grind, whether it's to the upside a little bit or to the downside a little bit, is really the MO of the market, and I don't think it's changing anytime soon, unless, of course, there's some headline news that shakes it up a little bit. So overall, guys, I'm still staying bullish. Nothing's changing. We did tag that 13,000 level. Not so significant from a technical level, more significant just from a price point that, oh, it's 13,000. Where were you? Where was it, in 2007 when all this was happening? Now the key is, can we get back to 13,000 and close above there with any sort of significance? We will have to wait and see. But in my opinion, that's probably going to happen this week at some point. Have a good night. I'll see y'all tomorrow.